Thanks for having me on the show again. As you know, there's like this narrative out there that generative AI is like the early stage of Cloud 1.0, and our work really shows that this is increasingly misplaced. Purely from a capital deployment perspective, we estimate that generative AI deployments require 6 times more capital to deliver the same Cloud 1.0 economics. And that's something that really surprised us in our analysis, and that's why we downgraded, heavy-hearted our hyperscalers. So I think it is really the economics are far worse than what we and that the market also believes.
So how does this end then, Alex? Because for these companies, it's been full steam ahead. What becomes the catalyst for them to realize exactly what you're saying, that they aren't producing the results to continue to justify the spend that they're undergoing?
Yeah, I think, post the optimization cycle, generative AI was quite welcome because it gave initially like the growth boost. So from a, top line perspective and also operating margin perspective, it doesn't look bad. But where you really have to focus on is on the cash flow generation and the cash flow conversion. And I think what will make them, slow down spending is just that the equities just derate because it will become more obvious that the economics just don't stack up to what they've communicated.
Maybe now is the start of that, Alex. You are starting to see some of the shares fall, but this downgrade you've issued, it's rare for these companies. There's so much enthusiasm. We were just looking at the Bloomberg screen of analyst recommendations. More than 90% of analysts covering these two stocks have a buy equivalent recommendation on them. How difficult is it to break from the trend in this sector that has a lot of hype, Alex? There's been a lot of careerists talked about of being willing to step away from the pack in stocks that had been red hot until recently. Was that a difficult decision to make just because of the pressure in the success, again, maybe until the last week of these share prices?
I think it has been a difficult one because we have been above consensus for a long time. We have defended these companies for a long time. But I think what is fundamentally different is, just to be clear, the cloud was perfect because the hyperscalers have captured the software layering economics on top of the infrastructure. If you believe that generative AI is big, the likes of Anthropic and OpenAI act as a platform, so they will capture more of the economics. But yeah, we need to be independent, and if the figures and the numbers tell you a different picture, you're just gonna act accordingly.
So what is kind of the balance to strike for these companies that are investing in something that for them and for many people, and okay, most people, that AI holds lots of promise? Is it a case, Alex, of just over-investing, or is it just completely misplaced faith?
I think, most of the growth in terms of like compute and spending is just still driven by consumer inferencing and also like training, and actually on the enterprise adoption where API is the best indication, it's mainly software development. So if you were to break it down, it's a software development, so coding cycle, and they have to invest, they have to be part of it. And I think the risk that they overbuild is significant because we are basically scaling at a very inefficient stack because they haven't quite worked out, the efficiencies. And that's very different to the cloud because the cloud really started to scale when it was really efficient. So I think there is an increasing risk there of overcapacity, and a lot of these projects may end up not generating any value at all. It could be negative.
Alex, one of the things that the common refrain of guests that come on here will say, okay, maybe there is going to be this moment of overcapacity, but it won't emerge until 5 years from now, maybe even more years, that it's going to take some time to really realize what the current dynamic is. Why go in with a downgrade now? Why not say it's going to take some time to figure things out, but for the meantime, these companies are going to be the beneficiary of an AI build-out?
They're simply not the beneficiary. I think the market is telling you already. We've seen a third quarter where across the board, top-line expectations have been beat, buy-side expectations moved up, and yet the stocks, started to derate because investors have upskilled and, people start to look at the economics much more than the top line. So if we make this call later, it's too late.
It's a fair point, Alex. We're finally looking at more into the balance sheet than what used to be the case for these tech companies of just being like, hey, that's a nice cash pile you have there. May I have some of it? Considering how much things have changed, that these once asset-light companies are now asset-heavy, that depreciation costs start to stack up. Just how different is it to be a tech analyst right now? At Redburn, how differently are you looking at these companies as a completely different prospect than they were just a mere 5 years ago?
They are capital-intensive business models, so you have to take a very different approach. And my focus is basically just on the hyperscalers. And I think there's one other point that is quite important because these companies always try to tell you that this is very similar to the cloud 1.0 early days in terms of economics, but it's simply not, because in the early days of the cloud, these companies have assumed, a 3-year server lifetime, and now we're starting off with generative AI with a 5 to 6 year server lifetime. So it's very, very different. I think the debate is becoming much more nuanced, and we advise investors to be much more critical.
Hey, Alex, just quickly, because obviously what NVIDIA does also drives a lot of the companies that you oversee. Is there anything on Wednesday that would make you feel more positive about the companies you cover, about Amazon, about Microsoft, about Oracle?
Not at all. No, I think for us it was not a short-term call. This is like a structural issue for the industry. It's not going to change our views.